Hello, I'm Bernard Hickey from interest.co.nz and welcome to 90 at 9. Everything you need to know in 90 seconds at 9 o'clock, starting now with news that the New Zealand dollar dropped to an 18-month low of just over 68 US cents last night. That's because the Reserve Bank of Australia cut its official cash rate by 25 basis points. Now this is the first cut in the Australian official rate since December 2001. So what did that mean? The Australian dollar fell quite sharply because this was confirmation of what many had expected, that the Australians were going to ease monetary policy. Now that meant the Australian and New Zealand dollars weren't quite so attractive for international investors looking for high interest rates. They can go elsewhere, South Africa or Brazil. And so that meant both the Australian dollars and the New Zealand dollars fell. Elsewhere, the US dollar was stronger overnight, and that helped the fall in the New Zealand and Australian dollars because the oil price fell $7 a barrel to $107 a barrel. That's all because Hurricane Gustav wasn't nearly as damaging as everyone thought. But it may not pay off at the pump here. That's because once you take into account the lower New Zealand dollar, on top of the lower oil price, there's not that much change. In fact, right now, the current price of regular petrol should be around $2 for a litre, not the $1.99 that it is. Turns out the oil companies, their profit margins have been squeezed in recent weeks. Finally, more news of the credit crunch. The Korean Development Bank is in talks to buy a controlling stake in Lehman Bros, the old US investment bank, needing some extra money just to boost its capital, and the Koreans are going to come and rescue them. I'm Bernard Hickey. That was 90 at 9 for interest.co.nz.